Hello everyone, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our weekly webinar, this masterclass about how to trade stocks. I'm glad to be with you guys, so please give me a mic check first of all. So 1, 2, 3, check if you guys can hear me. So please say yes or no. Okay, great, wonderful. Good to see so many people over here during this COVID period, and that this masterclass is about how to master the stock markets, which are under the influence of course, coronavirus and COVID-19. Now, on most of the countries around the world, they have eased off, as you know, the coronavirus restrictions. And also there is enormous amount of a chatter about the upcoming vaccine. So we will discuss all of that, and then what trades and what stocks to really consider. And more importantly, the levels in relation to support and resistances for these particular stocks. So once again, my name is Naeem Aslam. I'm the Chief Market Analyst at AvaTrade. I had the entire research for AvaTrade. So all the different articles and the videos that you look at on a daily basis is pretty much done by myself. Okay, just to make sure. So can you guys see my screen as well, right? I just had someone was saying that you couldn't see my screen. No, there's a video. Okay, great. Okay, wonderful. I don't know what happened, but now it's good that you guys can see the visuals. So now, in a series of 3 questions, as always, I wanted to ask you guys a few things. First of all, please say yes if you have attended any of my previous webinars. Philip, if you're not hearing me, that is probably because you have something wrong with your mic, because a lot of everyone can hear me perfectly. So that's something to do with your own mic. So please try to try to fiddle with that. Okay, thank you for everyone. I see that a lot of familiar names once again, and I'm so glad to have all of you, Talat, Carlson, Sean, Balti, Gary. I'm really glad to have all of you guys back in my webinar. Now, the second question is in 2 parts. The first part is, please say yes that if you've been trading under a year. Again, it shows me that this time we have relatively less number of people who've been trading under a year so far, because I'm getting yes, but not in a vast majority of that. Okay, so that's really good. That's really good. Okay, and now the second question is, please say yes if you have been trading over 2 years. All right, okay, a few yeses over here. I see Eunice, Sean, Lucio, Balti, Dow, Carlson, Georges, Guven. Okay, Guven says no, sorry. Darwin and Carlson also said no. All right, okay, that's okay, that's okay. Right. So the reason, as always, that I asked this question is because I wanted to, reduce or perhaps increase the level of complexity during my analysis, during this conversation with you guys, and then how for you to make sure that you guys understand how to fine tune and how to spot the opportunities in the market. So that's the primary reason behind it. Now, what we're going to do, folks, first of all, we're going to go through this important slide, which is disclaimers and risk warnings. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. The full disclaimer is right in front of you. Now, the most important aspect as a trader for you guys is to be informed. It's for you guys to have all the breaking news coming to you directly. And I'm going to show you how you can do that, because we are living in a world where the news comes out and the markets pops or it drops. Doesn't matter whether we are talking about Forex, whether we're talking about equities, and whether we're talking about commodities. The move is enormous on the back of the news because it is Donald Trump's era. This is Donald Trump's time. And with him tweeting so much, the market is all over the place. So I cannot emphasize more, as always, for you guys to understand the importance of Twitter and being on Twitter. So you know, because you get, but once you follow the right accounts, you get all the information directly on your phone while you are trading. If you see a big spike in a stock, whether it's a Tesla, whether it's Netflix, whether it is Disney, Microsoft, or whatever you are trading, if you see a big spike to the upside or to the downside, you will have the information that why is that. And I am fairly very active on my Twitter in terms of bringing all those news. So feel free to interact with us, with AvaTrade, to ask any questions. The Twitter handle is right in front of you. For myself, it is Naeem Aslam 23, and for AvaTrade, it is at AvaTrade, and I will show you the real accounts in a bit as well. Gigi, everyone can see the screen, so I don't know why can you not see it, my friend. So maybe try to log back out again once more time and then try to log back in. Now, in terms of YouTube channel, folks, on a daily basis, once again, I put two different videos. One is your fundamental video, which takes care of all the fundamentals that are moving the markets. And secondly, for more experienced traders, we have our technical analysis video. So let me bring out the accounts, the one that I was just talking about. So it's for you guys to really see that how to follow and then what to do about it. Right, okay. So first of all, as you can see in front of you, so this is my Twitter account. The handle is right there. And then you can see that, you know, been very active so far and talking about the matters which really are moving the markets, like, you know, Putin, a gold report, just kind of a heads up, and the UK economy, how it shrank, in Russia, how it is making its clinical trial and all of that stuff. So it is very important. When you go into it, then on your mobile phone, you can turn on the notifications. You'll get the notification straight on your phone. And secondly, for AvaTrade, please make sure that when you do, and if you do follow, that you're following the right account, because AvaTrade is verified on Twitter, and there are a lot of scams out there. So you just got to make sure that you know, that you have the right one right over here, right? Now, in terms of YouTube, what is quite also intriguing is this is the channel for YouTube, and this is where all the movements, all the analysis is being put up in terms of fundamental and technical analysis, which is quite an important one. You know, when talking about gold, you know, because obviously there's a huge move in gold, and I know this particular webinar is about stocks, but I just kind of wanted to cover it because one of the biggest one-day plunge, gold prices have seen one of the biggest one-day plunged. And investors are asking themselves this question, if there is an opportunity. So just to put things in perspective, you know, this particular chart right at the bottom of this one, this is showing you one-day percentage gains or losses for gold prices. Now, what you can see over here is a massive sell-off, right, in gold prices, because the prices have retraced from 2075 to 1931. In fact, the prices as of today, they were very close to its 50-day moving average. These are all simple moving averages. This is your 200-day moving average shown in yellow. This is 100 is in green, and then followed by that 50 in pink, right? So what you see is that this is a one-day percentage moves up and down. So the move that we've experienced yesterday was the biggest move since 2013. So since 2013, we have not seen gold prices dropping in a manner that we have seen them yesterday. So that really signifies the importance of the huge sell-off that we've experienced in the market, and why and how there could be an opportunity over here. So it is quite an intriguing one for you guys. Does this chart make sense to you guys? Are you guys with me on it? Okay. Again, if you wanted to learn a little bit more about this one, or want to read a bit more about it, the analysis will be published. It is published there, and then again, you can go back to Twitter, and then you can read more onto that as well. So it is quite an important one. So for me, when it comes to gold prices, really, I think that the likely scenario in terms of a gold support is really going to be near its 50-day moving average. So right now there is an opportunity right here if you want to put a stop below the 50-day moving average and then run to the upside, where the prices can literally go all the way to the moon, meaning that they can go to us 2200. Followed by that, the next level could be 2500 or even 3000 mark, which is also talked about in the market quite a lot as well. So it is an intriguing one. So I think that the opportunity is there. But if the price does break below the 50-day moving average, the next important support zone is near this 100-day moving average, which is in around 1763. If the price continues its journey to the downside, then the next important price level is at 1650. So keep an eye on that particular price level as well. I personally do not think that prices are likely to go beyond 1650. I think 1650 is a very reasonable and strong support for the price, and prices are likely to move and continue to move higher from here onwards. That is what pretty much I think about a gold price. Now, let's go back to our presentation and let's continue with our agenda. Here it is. So in terms of our agenda, what we will be really doing today in this particular webinar would be that we'll be measuring indices, like which one is the strongest and the weakest, measuring sectors. This is a little bit beyond, but we will discuss that a little bit in detail as well. Special stocks under COVID-19, and then we will go through all these stocks, the one that I have mentioned in front of you. So you guys can see that there is a lot of there is quite a lot for us to cover. So let's crack on it, and then we will try to cover as much as we can as we go along. So I'm going to bring out the MT4 platform. Again, this platform, I'm sure that all of you guys already have them. If you haven't, then you can always download them from AvaTrade's website. So let's begin the analysis by looking at 3 different indices. So in order to do that, what I'm going to do is I'm going to bring out a different chart for you guys, first of all. I'm going to bring out the chart grid for you. So this chart grid on the top, what it shows you the Dow Jones, S&P, and NASDAQ. Without any doubt, by looking at the weekly chart for 3, we know that the NASDAQ is the most strongest index of all of them. Why? Because first of all, it has crossed its all-time high, and it is making new record highs, and of course it is above all the 3 important moving averages. The second most strongest index is your S&P 500 index. Why? Because the price has crossed above all the 3 important moving averages, and it has come into previous highs, previous record highs as well. Now, of course, the index can run into some sort of a trouble, which it does seem like that yesterday was an early indication, but the futures are trading to the upside again today. But that double top, the formation of a double top, it could really happen. And if that happens, the market can really retrace all the way to 3,200 or perhaps to 3,054 near its 50-day moving average. Now, the Dow Jones index on the other hand is the weakest index among the other 2. Why? Because it is still below its record high, but it is above its 3 important moving averages, so which is again a positive sign. But what we are seeing in NASDAQ with respect to the price action is that the price has crossed this high, the high which was formed back in June. So it is positive. Now the next level is right over here, in around 28,997 to 29,397. So this is the area of consolidation that we'll be really looking at if the prices does come into it. So we know that if we are talking about tech stocks like Microsoft, like any Facebook, Apple, Amazon, that we're really looking at this and NASDAQ territory, and we know that the momentum is very, very strong. But we also wanted to take some sort of a precaution, and that precaution is on the basis of that the NASDAQ index is way, way too high from its moving average, and that means retracement. And if the retracement does happen, that retracement can bring the prices back in around the lows of this one, which is 10,210. And if that doesn't hold, then the next level is 9,905, in around this level of support. Now, by looking at the three indices, what we have done is we have identified which is the weakest index and which is the lowest, the strongest index. Now, the weakest index within the three, we have confirmed that this is the Dow Jones, and the strongest index, it is your NASDAQ. Now, let's move back to the story of our stocks. So let me bring out some of them. Now, in terms of sectors, what we really look at is, we talked about that we are going to look at these particular stocks. So out of streaming, we're going to talk about Disney and Netflix. Out of airlines, we're going to look at Boeing, Pharma, Johnson & Johnson, and Pfizer, online retailer, Amazon, eBay, and Alibaba. Energy, Chevron, Exxon, Mobil, Shell and Total, banks, Bank of America, Citigroup, Barclays, and Goldman Sachs. Now, if we begin the conversation with the banks, sorry, so here are your banks in terms of your watch list, if you can see it, right? Let me just maximize it. What you see over here is that JP Morgan is up year to date -75, -25. So basically, year to date, JP Morgan is still down. Goldman Sachs is also down. Barclays is also down. Morgan Stanley is also down. And then you have Lloyd's TSB, which we are not really covering, but that is also down as well. So JP Morgan, Goldman Sachs, Bank of America, Morgan Stanley, Barclays. Apart from Morgan Stanley, every single banking stock is down. So we know by looking at it that the banking sector is still relatively very, very weak, right? And this is where the alpha is for us. What do I mean by that alpha? Because I tend to buy those stocks which are cheaper rather than buying those stocks which are very expensive. Now, let me explain the concept of expensive. Remember, we talked about NASDAQ being so high and so away from its moving day average, 50-day moving average. Now, when we look at the performance of the tech stocks, Apple is up 50% year to date. Google is up 10%. Amazon is up 66%, whooping 66%. Facebook 24%. Microsoft 28%. Netflix 44%. And Tesla is up 228%. This is insane. When we talk about Alibaba, despite all that Chinese chatter and Chinese companies getting sanctioned and Chinese company probability of them getting delisted, Alibaba is still up 17%. When we talk about Chinese stocks like Baidu, Tencent, Tencent is up 38%. I know that we don't have it, but I just kind of wanted to run with you guys. But we do have Alibaba, which is up 17%. So that really shows that these stocks are really not cheap. There is no discount. But I'm not saying to you guys that, look, there's no opportunity here. What I'm saying to you is that the opportunity is here because NASDAQ 100 is holding on to some great momentum. But at the same time, I wanted to take some sort of a precautious note. I wanted to take some sort of a precautious tone because NASDAQ index is very, very far from its 50-day moving average, and that can remain like this for a long time. But I just wanted to make sure that if I am going into the stock, I'm not going fully in. Because if I wanted to go fully in right now, I wanted to go fully in the banking sector because that is where the biggest discount is. Like, look, the beautiful name like JP Morgan is down year to date by 25%. So this stock is not up on the year. It is down by 25%. If you look at Apple, Apple is up 48%. So remember that reversal. So right now we are here. So first we got to recover, and then there's a huge potential to the upside. Now the situation is very, very similar in the airline industry as well. When we look at airline, Boeing, which is right over here, BA, is down 44% year to date, right? Then if I look at stocks like Ryanair, Ryanair is down 14%, EasyJet down by 54%, Wizz Air down by 4%, American Airlines 52, United 58. You know, so the delta is 49%. So there's again, you know, massive, massive, massive opportunities in here in the airline stock. And then I personally, for a disclaimer purposes, I own airline stocks, and I own all of these airline stocks, the one that I have mentioned. Why? Because I see really big opportunity in banking, and I also see massive opportunity in the airline industry as well, because they are selling at a discount and they are likely to continue their journey to the upside. So if the stock is down by 50%, remember where it will be when it is up 50% beyond zero, because right now it is below 0.48, and then we got to go above 0 to 48. So that is 100%, 200% move. Does that make sense? So the best airline stocks, you know, I cannot, the one that I like personally is like, you know, American Airline, United Airline, Ryanair, Wizz Air. And if that is not what you want to trade, then Boeing, Airbus, you know, they are all quite cool and very, very oversold on the you know, for the year. There's a huge potential upside for these stocks. And similarly, the same thing happens for the banking stock as well. I'll repeat the names for them: JP Morgan, Bank of America, Morgan Stanley, Barclays, Lloyd's TSB. These are all names where there is a massive, massive, massive discount to the downside, of course, right? And there's a huge upside in them, potential upside for these particular stocks. Is it wise to buy battered stocks? They got battered for a reason. Yes, that is a very good question. So they've been battered for a reason. So when it comes to bank stocks, we know that there is a huge risk with them about the loan provisions, the loans that these banks have given out to small businesses. They may never get back. But when we look at the financial statements for these stocks, for these banks, they look much, much solid, in a lot more better position that they are as compared to 2019. So that's where I see the value. When I talk about airline stock, yes, now the flights are empty. Yes, the airports are empty, but the situation isn't going to be the same moving from one year to today. You will see the capacity coming back. You will see these planes flying back. You will see people going on holidays again. You will see these planes bringing back the capacity, and this is where I see the value. This is where I see, you know, quite a big discount in them. At the same time, when we talking about tech stocks, Apple stock is likely to continue its journey to the upside because of new phones coming, new iWatch coming, new products coming, new services coming with respect to Apple TV. Same with Google, the revenue will become stronger once the businesses will return to advertising, and same for Facebook as well. But Facebook is already up. With Tesla, with stocks going so low, after the stock split, we are in a very different territory. Now the stock price can really enter into S&P because now it is much, much cheaper. So now quickly analyzing the price action in the last 5 minutes or so. So on a weekly time frame, when we look at the Bank of America's price, the biggest resistance zone for Bank of America, where I see it, is in between 28.95 to 28.43. The better support zone where the prices, they were or not too long ago, was 22 to 23, and this is where the price is really trading at right now. Tesla, I'm not going to touch it because there has been a stock split yesterday, so it is doing something completely different. With respect to Netflix, resistance remains at these levels at the top of this particular candle right over here. In terms of support level, we are entering into this support. The previous resistance is becoming a support, but if that doesn't hold, then we have another better level of resistance for those traders who like to minimize their risk than 428 to 440. I think this is a much better level, really, if you're really looking for. And even if not that, then keep looking at between 401 to this one. This is even better level of support. So just right over here, let me just draw them for you so that you know. So this is much, much, much better level. This is also a good level. The price is entering right now. So let's see how that will evolve. In terms of a resistance, we look at the all-time highs. In terms of Amazon weekly, again, the prices have started to come under influence, under some sort of a sell-off. The minor hiccup in terms of a resistance, if the price continues to move downward from here, it is the all-time high. In terms of a support, the immediate support is just at the below of these candles, and that runs over here. Don't worry about too much if I'm going too fast, because the recording will be available and you can go and watch it again. Johnson & Johnson consolidation continues. The resistance remains to the top of these particular candles. And in terms of support, we can move the support a little bit higher right over here. So this is the support area that I'm really looking at in terms of Johnson & Johnson. In terms of Boeing, the price kind of came close to our support level that we defined previously, but didn't actually really enter into it. So we kind of stayed out of this trade. Now what we can do is we can wait for the price. If it does revisit this area of support right over here, we could retry it again, but the resistance remain where it is right now. For Goldman Sachs, very, very interesting. The price is trading above the two important moving averages, your 150-day moving average, weekly moving averages. The resistance, I'm going to hold it to this point, a really important price level. But the immediate resistance could also be just right on top of this where the price is trading. Right over here. So, if the 200-day moving average price moves above that, this is where it can find some sort of resistance. But if the price can break above the 200-week moving average, it is likely for the prices to continue the journey to the upside, not to the downside. Google, very, very strong momentum. Again, there is so much to talk about with respect to Google, but in terms of a support zone, we're really looking at these levels. The immediate support zones, they are not the best ones, but they are the ones which can really get you into the trade. But the better level of support, of course, is 50-day moving average, 50-week moving average, right over here. Resistance, leave it open, let it continue. I think the stock is moving towards the moon, so let it continue towards that side. Someone asked me to quickly do BTC. Bitcoin, let me just look at Bitcoin weekly right over here. I'm really waiting for the prices on a weekly time frame to see the low of this one. The low was 10,920. We really wanted to stay above this low, because if we break below this low, it will not be positive. It is likely the price may change its direction. Right now, the direction looks beautiful because we have a higher high as compared to the last week, but we need to make it even more prettier by breaking the high of this the week before that, or prior to that, and then that will confirm the strong momentum to the upside. Okay, let me look at some of the questions which have been coming. Okay, do these stocks have monthly or bi-monthly rollovers? No, they don't have any rollovers. Please give 5 minutes. 5 best stocks that I should focus on a beginner. 5 best stocks that you can perhaps focus. I think, for stocks, Julius, with that perspective, you want to keep a long-term perspective. You don't want to perhaps do the day trading with them. And any stock where there's a huge discount is really an opportunity. So if you're looking for momentum, then your momentum stocks are obviously your tech stocks. And if you're looking for your discount stocks, then anywhere in banking and in airline could be an option for you there as well. Let me look at the next few. What were the next few questions over here? I'll ask you a question about buying stocks and keeping that position open overnight. Is there an overnight carry cost? How does this affect your price? I think there is a very small minor carry cost for this carrying the stock overnight, but it's very, very small, very minuscule. But again, that depends. That depends on the size of your position. So if you have a huge position, that small thing doesn't remain smaller; it becomes big. But again, you wanted to check with your account manager for that. Is this ideal for new traders? Answer later, please. I want to ask you a question about buying stocks. Okay, so Grace, what is ideal for new traders? I don't know what you are asking me there. What is ideal for new traders? So maybe you wanted to pose that question again. Miss IO, don't worry. If you missed anything, the recording will be available on AvaTrade, so go back there. Please tell something about goal levels. So I did talk about goal levels earlier, folks, at the beginning of this. We started with the goal levels. So really we're looking at this support zone, which is 50-day moving average, then followed by the 100 and 200-day moving averages. Right now, the opportunity is to perhaps go to the upside and then put a stop loss below the 50-day moving average and shoot for the moon. If it breaks, then again try it at near 100-day moving average. If that breaks, then try near 200-day moving average. Okay. What is happening to oil? Again, today is about stocks. It's not about commodities. Very much of a consolidation zone. We continue to move to the downside. I don't expect big major moves for oil prices. Just small minor blips here and there, and that's pretty much it. On a daily time frame, we are above the 2 important moving averages, and that's what matters. As long as the price stays above the 50 and 100-day moving average, I think the path of least resistance is skewed to the upside. All right, that's all for today, folks. Thank you so much for joining as always, and I will see you guys same place, same time next week. Thank you.